There is a signal that appears before every major collapse in history. Before 1929, before 2008, before every crisis that destroyed empires, banks, and entire families. A signal so silent that almost no one notices it, but so powerful that when it emerges, history changes direction. It's not a screaming headline. It's not an official warning. It's something that happens in the shadows, backstage, far from the spotlight. This signal disappears for years, sometimes decades, but it always returns when the system is about to enter its most fragile phase. And when it comes back, it's as if the entire machinery starts grinding before completely seizing up. Now it has returned. In November 2025, as you watch this video, the same patterns that preceded history's greatest collapses are reappearing. Corporate debt in the US has surpassed $12.1 trillion. Banks globally have restricted credit at levels not seen since 2008, and leading economic indicators have fallen for 3 consecutive years. But you won't see this on the main news. While this happens, there are banks, governments, and investors making decisions you won't see publicized. Decisions guided exactly by this signal. They're moving, they're repositioning, they're protecting themselves. But they're not warning you. And the most terrifying thing isn't what this signal represents. It's the fact that almost no one is talking about it. No one explains it. No one teaches you how to see it. Most people will only understand when it's too late. When the crisis is already knocking on the door, when jobs are at risk, when credit dries up, when the sense of security turns to smoke. Today, you won't see opinion. You won't hear conspiracy theory. You'll see a documented pattern repeated in 1929, in 2008, and manifesting now in 2025 with frightening precision. By the end of this video, you'll understand what's about to happen with your money, your job, and your sense of security before everyone else. And this is just the first chapter. This is Signal 1, the first warning in the next 1929 series. Before any collapse, there is an invisible rupture, the breakdown of confidence. It's not a red graph on the screen. It's not a number splashed in a headline. It's not breaking news on TV. It's something deeper, more visceral, harder to capture in words. It's a change in behavior. First, inside closed rooms, those locked-door meetings where the real decisions are made. Then, between major banks, when one begins to look at another with suspicion, questioning whether the decades-long partner is still trustworthy. Then, between governments. Finally, among ordinary people. In September 1929, 3 weeks before the historic crash, the official statement uses bureaucratic language, full of technical terms. Very few people read it. Even fewer understand it. None of this, alone, seems like the beginning of a collapse. In the official narrative, everything is technical adjustment, policy review, standard preventive measure. But here's what history teaches us. In 1929, in the months preceding the crash, critical signals already appeared. Plummeting car sales, falling construction, retracting steel production. But the stock index continued rising until September because the public narrative ignored the real data. In 2008, no single indicator predicted all dimensions of the crisis, but multiple signals appeared simultaneously. Excessive credit growth, asset overvaluation, increasing corporate debt, banking liquidity restriction. Now, in 2025, the same patterns repeat with frightening precision. The public doesn't feel immediate pain. There's no image of street panic, no bank runs, no desperate screaming. Just friction, small no's where there used to be yesies. Processes that took 1 day now take 10. Credit that was easy now becomes, let's reevaluate your profile. Most people's fatal error is thinking, this is just noise, normal system fluctuation, temporary bureaucracy. But actually, it's the first phase of the avalanche. Think of a real avalanche on a snowy mountain. It doesn't begin with the entire mountain collapsing at once. It starts with small movements. A rock coming loose, a bit of snow sliding. Micro tremors that almost no one notices. While people continue living normally, working, paying bills, making plans for the future, this silent behavior intensifies. The small no's multiply. The frictions increase. The protections spread. In all major crises of modern history, the emotional cycle is almost always the same, as if following an invisible script. First comes euphoria. Everyone is making money. Investments rise. Credit is easy. In 1929, American industrial production grew 3.1% annually throughout the 1920s. Wages hit historic records in September, and the stock market rose 290% between 1922 and 1929. The collective feeling was that we've entered a new era of permanent prosperity. Then comes denial. The first signs of trouble appear but are immediately dismissed. In 1929, when analyst Roger Babson issued his warning of imminent crash in September, he was publicly ridiculed, even while car sales, real estate, and steel production had been falling for months. In 2008, when economists warned about the housing bubble in 2006-2007, they were called pessimists and alarmists, even with data showing unsustainable subprime credit growth. Then silent discomfort emerges. In this phase, people begin to feel something is wrong, but can't put their finger on exactly what. In 2025, this discomfort is already palpable. Economic activity indicators falling for 3 consecutive years, labor market slowing, oil prices dropping, signaling global weakness. Finally comes the shock. Suddenly, everything collapses. In 1929, the Dow Jones lost 33 points in a single day, a 9% drop in trading volume, 3 times the average. Over the next 3 years, the index plummeted 89.2%, closing in July 1932 at just 41.22 points, the lowest level of the 20th century. Signal 1. The breakdown of confidence at the top of the pyramid always reappears between euphoria and denial. It's when, on the surface, everything seems relatively fine. But up there, in the system's control room, something doesn't fit anymore. Here's the pattern repeating in 2025. Massive overvaluation of assets disconnected from real fundamentals, exactly like in 1929 and 2008. Explosive growth of corporate debt. Leading indicators of economic activity fell for 3 consecutive years and now enter negative territory. Consumption collapse. Retail sales in the US fell for 3 consecutive months in 2025, something that historically precedes GDP contractions. This reveals consumer fatigue and loss of confidence in the future. Labor market slowdown. New hires plummeted dramatically in 2025. Although partially affected by immigration changes, the drop is too sharp to be just statistical noise. Signs of global weakness. Oil prices fell in 2025, signaling weak global economic growth. When oil drops in a non-declared recessionary context, it's because major players already anticipate demand contraction. We have entire countries operating at the limit. Economies that only haven't collapsed completely because they can take more loans, because they have access to international credit lines. But what happens when creditors start to doubt? And here's the critical point. There's a limit to how long you can push problems forward. It's not a technical limit, as if there were a law of physics preventing it. It's a psychological limit, human, emotional. That limit is precisely confidence. You can manipulate numbers in a spreadsheet. You can pass laws that change definitions. You can print more money. But you cannot directly control confidence. It emerges organically from millions of individual decisions. And when it begins to crack, no government or central bank action can simply restore it by decree. When a bank looks at another and thinks, "What if it can't pay me?" Even if it doesn't say this out loud, something fundamental has broken. When a government looks at its own projections and thinks, "What if we can't sustain this?" Even if it continues smiling publicly, the foundation has cracked. And here comes the objection, you might be thinking. But central banks are more prepared now. They learned from 2008. They have better tools. It's true. Technically, yes. But technical preparedness doesn't replace psychological confidence. And it's precisely confidence that's breaking, not the technical capacity for intervention, but the collective belief that interventions will work this time. Signal 1 reappears exactly at this moment, when those who really know act differently from what they say. Signal 1 doesn't appear on a news screen, obviously. It appears at the edges of your life, in corners you barely pay attention to. Scene 1. The Bank John, 42, sales manager. Stable income, impeccable credit history, always approved immediately. This time he applies for financing to change cars. Bank response, "Sir, the system requested additional documents." 3 weeks of waiting, then another week. No clear explanation, just changes in analysis criteria. Ordinary people only realize something catastrophic happened when the effect is already too aggressive. Credit completely drying up, generalized company failures, massive unemployment wave. But those who understand Signal 1 see the script assembling long before the curtain rises. There is a specific moment when Signal 1 stops being just a warning and becomes a point of no return. In 1929, it was when, after the September peak of 381.17 points, the market began to falter, a term used by analyst Roger Babson. Major institutions began aggressively collecting liquidity. In October, trading volume tripled in a single panic day. The system passed the elasticity point. In 2008, it was when the interbank market, where banks lend money to each other daily, practically froze. No bank trusted any other. Without this basic confidence flow, the entire economy suffocates. In 2025, we're seeing signs that this point may be near or already crossed. Credit restriction at record levels, 63% of banks globally. Leading indicators declining for 3 consecutive years, now entering negative territory. Official recession watch alert by prestigious academic institutions. Collapse in consumption and labor market happening simultaneously. It's like a rubber band being stretched. For a long time, it holds. Stretches, seems like it will last forever. But there's a point, impossible to see with the naked eye, but real, where internal fibers begin to rupture. When this critical point is reached, collapse stops being a distant possibility and becomes just a matter of time. Mathematically, psychologically, structurally, it has already begun. Only the visible manifestation remains. And here's the cruelest part. When public perception finally catches up with reality, it's already too late to protect adequately. Prices of safe assets have already skyrocketed. Opportunities to exit risky positions have already evaporated. Credit has already dried up. This is why understanding Signal 1, while it's still in the early, silent phase, is so valuable. It puts you ahead of the curve, allows you to act while everyone else is still sleeping. Signal 1 isn't the collapse itself, it's worse than that. It's the invisible beginning of the collapse. It's the exact moment when the system admits to itself, internally, in closed rooms, in confidential reports, that something critical will break, and then begins to protect itself before telling you. In 1929, Jesse Livermore sold everything in September. The crash came in October. In 2008, banks began restricting credit 6 months before the public collapse. In 2025, the same movements are happening now. It's the ship slowly sinking, while the officers already know there aren't enough lifeboats for everyone. But continue telling passengers to stay calm. And this exact moment, this historic inflection point, has already arrived. Human history has returned the same precise warning it gave before 1929, before 2008. The pattern hasn't just returned. It's already active. It's already unfolding. The first movements have already been made. The first protections have already been implemented. Those who know first have already begun to retreat. But the music still plays. The historic signal that always appears before major economic collapses has returned. And now you know exactly what it is. A breakdown of confidence at the top of the pyramid, manifesting in small signals at the base. You learned how it's born. Through discrete decisions, credit restriction, position liquidation, regulatory changes, that form a clear pattern when observed together. You understood how it repeats: euphoria, denial, discomfort, shock. You comprehended what this signal means. The system no longer fully trusts itself. Now 3 practical actions you can take immediately. 1. Review your long-term financial commitments. If you took on large debts based on the premise that the system always holds, reevaluate that premise now. 2. Build 3 to 6 months of liquid reserves. Not just investments that depend on markets functioning perfectly. Real money, accessible, that doesn't disappear if the system freezes. 3. Observe actions, not official speeches. When a bank says it's solid but is selling assets, pay attention to what it does. When a government claims the economy is strong but desperately changes rules, observe the acts. History never left people completely in the dark before a crisis. It always sent warnings. The question was never lack of signal, it was lack of attention. But you no longer need to be part of that blind majority. Those who understand Signal 1 don't react with panic. They react with clarity, with strategy, with preparation. If you want to continue this journey, this was just the first chapter. The next video will reveal Signal 2, the one that appears right after the initial breakdown of confidence, and that drags the entire mass into the crisis. The next 1929 continues. History isn't just acting, it's warning. The question is, will you look away or will you choose to see? History isn't just acting, it's warning. The question is, will you look away or will you choose to see?